slowly building up. Larry is not going to be with us today, but he's going to be ready to slide every single segment, everything I'm going to talk about. Okay, you can see me here, and this is going to be the way we're going to take this is just I'm going to go asset step by step, individual assets, and I'm just going to go and give my take on what is happening today. As far as news, let me just take myself from the screen because you guys want to see what is happening. Let's take a look at a different platforms. I'm going to start with MetaTrader 4. Also, I'm going to talk to you about TradingView, volume profile, Hawkeye Traders tool, Hawkeye Traders tools. Yes, exactly. Need to practice my pronunciation for an upcoming product release in the US. So yeah, let's begin. Let's just dive into this. First, we're going to go directly, and let me see if I have full screen. Perfect. Now we're going to go directly to, let's talk about this thing happening. Larry's going to make a full segment on the euro versus the Japanese yen. And let's talk about it for the next 3 to 6 minutes. So if you're looking to trade this week, equities, for example, and you want to have your footprint in the Forex market, you're looking to buy risk. You want to go risk on. That's what you want to do, all right? So in this case, for example, I'm trading from the 15-minute bar chart candlestick, Japanese candlesticks, and I want to find patterns. That's what I want. I want to find patterns. I'm going to use a very simple strategy. You don't have to laugh about it. It's just trend Fibonacci. How do you do that? Well, if you get your MT4, remember you need to have an MT4. Even if you're just starting trading or you're just practicing, you need to develop atomic habits. All right, you need to practice. Remember, we're not used to trade, and sometimes it's not investing what we fear or losing money is not really what we fear. Is the fact that we don't know how to use the trading platforms. That's what happens. All right, so this is your MT4. Remember, for purposes of the videos, everything you see here is for educational purposes. And yes, it leads you to make money. Yes, but remember, at times, you may not make money. So you have to prepare yourself as well. But you do that, you place stop losses, you take sizes that are according to your equity, your available equity, your risk capital. That's what it is, okay? Now, MT4, very basic trading platform. Up here, the top toolbar, draw Fibonacci retracement. Click there, bring that down, and then from the low that you see on the screen to that intermediate top. Okay, so now what we want to do is measure this. We have 47 pips. You see that? From 125 over there, see to the right, 125.77, all the way to the zero, it's 126.24. The range is 47 pips, 46, 47. Hey, please call it 50. Okay, pips. Now, we always have to translate this to money. So if you are trading with, remember, each one of you will be different. So if you're trading with one standard, yeah, standard lot, change to blue. Okay, one standard lot, that will be equal in money. That's let's call it about 47 GBP, 450 GBP in profits. Okay. Now, the trick here is to define your risk. That's what we're looking at. We need to know exactly worst case scenario, right? So when I look at this, the two levels that I always want to pay attention are the 61.8%, this one to the right, and the 38.2. Those are the key levels, okay? That's where you need to focus. Now, the market in this case, it went all the way from 125.77, and then it slowed down at 126.24. Then you have this, which is the pause, where the asset is just going to take a break. Okay? That is where the 90% of retail traders or those new to trading will take their entries, because you don't know at this point at 125.77 if you're just going to continue lower. Nobody knows. Okay? So right there, what you want to do is, as soon as you see the pause, then you take your entry. All right. So the way it looks is, this is the price action, the structure of the asset. It's going to start moving up. All right. And then you have the pause. There you go. Right there, right here. Let me see. Can take this shapes. Right here is where you see 90% of retail traders will take their entries. And then you have continuation in the direction of the trend, which is up, at least in the 15-minute chart. This is where I want to see my focus. This is just to give you an idea for short-term trades, what you can do, okay? And I'm not using anything fancy. It's pretty simple. I can assure you it's pretty simple, but you have to practice. You have to do it over and over again. So there you have the moment where the price continue. Your first take profit will be 126.24, and then you have the final projection. Now, that projection is simple to detect. Let's take a look. Just going to remove everything. Perfect. So all I have to do is this. I take again the trend Fibonacci right there. Okay. And now let's look for shapes. I'm going to use this one. Remember, that's about 47 pips. And then I do it again. And now from the area where you see the price reversing, in this case, we can say 61.8. Easy to see, all right? There you go. So our target for the Fibonacci projection will be 126.41. Now, what do we see now? We see how easily the price went all the way to 126.38. That's the high so far, the high that we're working with. And then it reversed. So this will be a valid case. This is a valid case as long as prices, the price of the cross euro versus Japanese yen, trades above 125.95. That is the 61.8%. Okay? That's the case. That's where I want to keep my buys. Now, does it look like we'll do that? Well, it looks like it wants to come back and retest this level, 125.97. That's the way it looks. Okay, we don't know yet. Well, absolutely doesn't look bullish so far, that I guarantee you. But we don't know. This is the 15-minute bar. Okay, so that was just giving you clues how to approach the market, how to take your entries, and how to follow trend Fibonacci. All right, so now let's take everything out. Let's remove everything. And that will be it as far as the cross euro versus Japanese yen on the 15-minute chart. We're using, in this case, Japanese candlesticks, all right? So that will be for Larry to take a moment and slide this content and have it available for everyone, right? So I'm just going to pause for a few well, probably a minute or so. So we take a look at this and Larry will do his job. Okay, perfect, guys. I'm back. Let's continue with the War Room 1985. Today, beautiful autumn. We're just finishing a couple more days, and we're going to go into winter. Let me sip a little bit of my coffee. Delicious. So now, let me just go back to Restreamio. Let me see where it is. So perfect. So I talk about the euro versus Japanese yen. One of the reasons, listen to this, one of the reasons you always, and this also will be another slide that Larry will give you, it's what to do with Japanese yen crosses. Now, remember, the yen is your risk currency, okay? So when things don't look well outside, there's political turmoil, something happens, investors look for safety. So they close their hands. So they don't invest more money. They start taking money from the markets, but they cannot put all that money back into banking accounts. That's silly. What is gonna do there? Nothing. So they take those millions and millions of pounds, euros, dollars, and they fly to safety. That safety is the Japanese yen. Remember, Japanese yen is your number one currency of safety. Now, we also know the Swiss franc is one of those cases. What we call the SNB, Switzerland National Bank. They also use the Swiss franc. They play with that, and we can say they can be accused of currency manipulators. But at the end of the day, also the Swiss franc is another safe haven. Safe haven. All right. Now, in recent years, remember, in recent years, when things get very bad, guess what is the number one safety currency? You bet, the US dollar, the all greenback. All right. Now, why is that? High liquidity. High liquidity. So, for example, at the beginning of the year, remember with the COVID-19 explosion, everything, markets went kaput. Well, remember, euro dollar crashed. It was probably trading under 110, the handle 110. What happened to the pound dollar? Great British pound versus the US dollar. It also crashed to all-time lows. All right. Then it was an amazing buying opportunity. We know the rest of the story. The pound is up about 2,000 pips. That means you probably, with one standard lot, will be positioned to buy, to actually make close to what? $20,000, 20,000 pounds, 20,000 euros, give and take. So remember, the idea of this little clip is to let you know when investors, they're concerned, there's political turmoil, there's something that is not good for them, they cannot take the money back to a bank account. It is silly. What do? Exactly. They buy safety. They go to safe havens. Japanese yen, Swiss franc, and the US dollar. So now you know when you see that appreciation, it's something is happening. Now, seasonality plays a game. And the last thing I want to share with you during this little clip is to understand that Christmas is good for money managers, asset managers. They want to collect their fees. Who is calling me in the middle of the session? Okay. So sure you understand that seasonality may play a benefit and investors will take risk in the next 2 weeks. We are at December 14th. So that means you want to expose yourself to risk. That means you want to buy Japanese yen crosses. You want to buy the pound dollar. Now, the pound, remember, you have still a little bit of the Brexit there, a little bit of Brexit risk. But remember what happened over the weekend. Ursula and Prime Minister Boris Johnson, they extended talks. So that means now euro Japanese yen, the euro a little bit, sorry for scratching my nose, guys, but so many things happening right now. So euro versus Japanese yen is one big play I have as well. The euro is doing well, not because there's inflation in Europe or things are happy. No, it's the future. Remember, markets trade the future. You don't buy today, you're buying the future, right? So there are a lot of positive developments in the horizon for these Japanese yen crosses. And remember, 2021, 2022, 2023, those are the years of the comeback. And as the great Paul Tudor Jones said, don't be surprised that the Americans will come with a sonic boom. And I quote Paul Tudor Jones, one of the greatest hedge fund managers of all time. This is probably one of the best things he has ever said. Sonic boom. And if that is true, if the economy is going to catch up with the markets, right? Markets are here, the economy is somewhere here, all right? If that happens and we have that catch up, what do you think is going to happen to equities? They're going up big time. And also, Japanese yen crosses are going to go up big time, going back to levels that you thought they were not possible. But the probability indicates, based on statistics, seasonality, and all the factors, investors are preparing themselves to better days ahead of us. So this is the clip. Remember, safe haven currencies, Japanese yen, Swiss franc, and of course, the almighty US dollar. Okay, guys, welcome back. We're going to continue with the show for today, the London Morning Call. This is the recording number 5. And now let's explore a little bit CFDs. I know in Europe a lot of retail traders, a lot of those who are looking to trade the markets, they go into CFDs, which is asynthetic. That's what is a CFD. Remember, contract for differences. All right. And that's to share with you what you do, and is the European version to, or actually the European solution for a lot of things. Like, you don't have to trade futures contracts. You can trade with a lot less money and get exposed to different asset classes. Now, the asset class I'm going to talk to you about is indexes. Today, we're going to talk about indexes. This is the CFD for the FTSE 100. And in this case, with the friends and the team from Alba Trade, Chile, it's in the South America, we have the symbol FTSE 100. Okay, I'm looking at the 4-hour chart. I'm just going to explore. So the next 3 to 5 minutes, I'm going to talk about this. And I'll say, hold a second. Hold a second, guys. Okay, guys, let's continue. So everything you see, guys, remember, let's start a little bit over Larry, and we're going to take from this point, okay? A couple seconds, and then I'm just going to start over again with CFD's details, what it is, and what we're looking at, all right? Couple seconds, and we start. Okay, Larry, let's just get done this segment with the FTSE for today. That will be enough. All right, guys, welcome back again. We're just going to continue with the war room this time, just going to explain everything with the FTSE. So this is what it's called a CFD, all right? Just so we have CFDs, okay? Contract for differences. It's the European solution to allow traders to get more action when it comes to different asset classes that sometimes because of the structure, for example, if you want to trade the FTSE as a whole thing, you may need futures contract, right? Or in the case of the S&P 500, or the case of the NASDAQ or the Dow Jones in the US. But in the US, they decided, well, in Europe, they decided, well, let's create a product that's a synthetic. So what you do with this one is that you're investing in the FTSE, right? But you may have the opportunity to do so with less capital. Okay. Today, I'm not going to give you an example, but just talk to you more about it. The reason why I want to talk about the FTSE 100 in this case is because we have the opportunity now with all the Brexit situation to buy at a little bit of a discount. It's lagging. It's lagging behind other indexes. The best case is the S&P 500 and the NASDAQ, for example. So I see the opportunity for us to do it. Now, how I'm going to do that? Again, just repeating trend Fibonacci. Remember, MetaTrader 4 and every single charting application will give you that capacity. Now, not all trading platforms that you are going to use to execute have easy technical tools. MT4, believe it or not, is a very simple platform, and it does provide that. It does give you a very simple interface to use. Now, look at it. It's just from that low to this high where we see the big pause in the price. Post-pandemic, we see the price. Where does it land? It lands at 61.8% Fibonacci. You can see that. Now, let's just repeat the process. We have the asset start climbing up, moves up, all right? Then you have the big pause. Now, you can say, well, hey, listen, Coach JR, I have seen this. It's easy to talk about the past. Why are we doing this? Well, the answer is simple. You need to practice, and you need over and over again to see the same process, the repetition, so you can learn it and develop atomic habits. You're going to listen to this many times over. I talk about atomic habits all the time. You need the muscle. You need to do this. You need to repeat it over and over again, until you grasp this. Now, you may say, well, I can get a job. Yes, I totally agree. You can get a job. You can do everything you want, but you will never have that exponential, that jump in your finances if you are not investing in the markets, because you need to expose your capital to, in a way, to have the opportunity to increase faster than you can actually get paid by the hour. Does that make sense? Now, you can work. It's not about hard work. It's about smart work. Now, rest assured, if you practice, if you give yourself time, you can make it happen. So now the price is, again, rushing to make new highs. And like I said, the FTSE 100 in the UK, the equity index in the United Kingdom, it's still lagging behind what is doing the counterparts in the US. So we have an opportunity. So this is the perfect moment, I see, for us to buy this. Now, I'm not going to lie to anyone. It is very obvious. There's a chance that it may drop at least another 366 points. That will be, I will say, a catastrophe. Catastrophe, how you all say that in English? But it will be something to consider that it won't be good for us. Now, I'm betting this is the end point. The pullback is not going to be as deep as this one to the left. From this point, we'll just have a continuation. That continuation will lead into 2021 and will give us the opportunity to buy right now, to take advantage of the last pullback in, I will say, British equities. That to give us an idea. All right. So that's the case. All right. Perfect. So that's what I want to do. Now, if I use trend Fibonacci, again, let me bring it. Take a look at this. Just place it right there. the price of the asset reversed from 61.8. So we always measure, let's measure this. It's about 1,772 points. That's the recovery. Then the pause, it's very nice. 61%, 61.8% of that area, that will be 1,000 pips. So I'm going to find my shape again, just to have an idea of the area I'm working with, and then the projection. Okay. There you go. So always remember, you are projecting from the very point where it reversed. Okay. Remember, again, this is where it reversed. Right there. 61.8% Fibonacci. Now, final projection based on trend Fibonacci on the weekly. Here, every bar that you see, every candle, Japanese candle bar that you see, candlesticks, it's based on a weekly bar. All right. So going into 2021, it can be all the way up to the first week of February of 2021. We're looking for a final target where we'll see the FTSE 100 trading close to 7,156 points. Okay. Now, this will be a huge win. Now, also, don't mind what you see in front of your screen, because these are levels that I have to trade, different tactics that I apply, and I'm using this information just as a guidance. I simulate a lot of portfolios, and then I take that to client's account. All right, just to have that clear. So this is the projection. This is we're looking at the FTSE. You can trade the FTSE comfortable. Look for FX brokers, AvaTrade, FX Pro. They all have that information, and they have that opportunity for you to trade. There's a very nice upside available. I'm betting on it, and my risk, if I have to say something, I will take the risk. It's a very tricky one, but I will take my risk all the way to 6,360 points. Okay, I want to make sure the risk is clear. Just okay, 6,320. Let me just measure. This is the open of the 3 weeks ago. Well, 6,373. That will be my. Okay. That will be my risk. All right, guys. So remember, if you're looking to trade equity indexes from all over the world, Nikkei 225, you also have the French equity index, the CAC 40, the Italian index, the German index, the DAX, the IBEX 35, that's from Spain, FTSE 100. We also have S&P 500, and you have all that in your trading platform. NASDAQ, that's the tech index in the US, Dow Jones. You have all that information available on your Forex trading account, and it will give you an opportunity to expose yourself when the time is right. I truly believe, based on potential deals, it's hard not to see a deal coming through between the UK and the European Union. So therefore, I'm betting on a recovery of British equities. The time is now for you to consider this particular asset. Well, guys, thank you so much. Today, we're just going to have 2 asset classes. We're going to come back tomorrow with more of the War Room 1985 London morning call, and with me, your coach, JR. All right, guys. So that was the War Room 1985 London Morning Call for today. We took a close look to first asset, Euro versus Japanese yen. All right. Remember, if investors are going to take risk, you can see that translated if you buy Japanese yen crosses. You can buy, for example, I have a few positions now. Let's see how it's going. Well, it's still stable, not really doing much, but I want to be long Euro versus Japanese yen, same as great British pound versus the US dollar heading into the end of the year. I'm looking for the Santa Claus rally, the Christmas rally, and that will be one moment. Seasonality indicates it's a moment when investors they take risk at the end of the year to improve their figures. And finally, remember CFDs. What are CFDs? Contract for differences. Is their European solution for you to trade, okay, for you to trade asset classes. There are big asset classes that traditionally you will need a lot of money. Equity indexes, in that case, you will need less money and you will have an opportunity to exercise again, if it goes your way, into that particular index. So with everything that is happening with Brexit today, I see a huge opportunity for you to buy the FTSE 100. I shared with you in the chart, you have that opportunity with AvaTrade. We execute with the office in Chile, in South America, but also there are other brokers all over Europe. You can trade with FX Pro and Handtech Markets, so and so. All right. Saxo Bank, there are different other opportunities that you places where you can have an account and trade with them. So that's it for today. We're going to come back tomorrow, edition number 6. We're going to talk more about the future of the pound dollar. I absolutely see if they go well between the European Union and the UK and close the gap. If they say they only have two things on the table that are they need to resolve. If that takes place, don't be surprised. Before Christmas, we see the pound dollar trading at 140 again, 144. The Great British Pound versus the US dollar, and talk about more about the euro. And start talking by the end of the week. We will talk more about what potential trades you can take by the end of the year. Thank you so much for watching, and I see you guys tomorrow. Oos.